What's going on, everyone? My name is Nicholas Merton here at DataDash, and today is January 28th of 2019. Well, folks, I hope you all are having a great day wherever you are, and today we've got a wide range of important topics to discuss for both crypto and traditional markets. For crypto, we're not only going to be talking about the recent sell-off we've seen over the past few hours in crypto markets, but along with that, we've got a huge range of topics from T0's initial launch all the way over to what I want to really talk about, which is what I see as the death of a vast majority of cryptocurrency exchanges, and how there's really an oversaturation at the moment in the space. And last but not least, we've got to talk in regards to traditional markets and talk about Japan. You know, it's commonplace that people think China is the one who reports false economic data, but little did we know that Japan had even worse manipulation of their data than China did over the past decade. So I've got lots of things to discuss. Let's not push it off any longer and dive right in to the update. So taking a look here over the past few hours here, we can see there really isn't many players in the green here. You've got a few here such as Holochain and Pundix. Again, Holochain's been ripping over the past week or so. It's been a major upturn really over the past 7 days. But as we can see here, most cryptocurrencies in the red following Bitcoin this week as it has started to decline lower. So let's go ahead. We'll spend some time here and take a look over the overall market view. It looks like we're going for a retest of the low, guys. And the reason I say that is because as we have seen Bitcoin, for example, at near or at these levels over the past week or so, we've had a few dips down to the lower support line, which we'll take a look at in regards to price in a moment. The rest of altcoins are generally following here, and we've started to cut past half of the gains we had from our bottom, and it looks to a point where we just need to come down and retest the lows, or retest $100 billion here in regards to market cap. And if we take a look at Bitcoin dominance here as well, looks like we're trying to test back up to the line of resistance that has weighed down Bitcoin dominance. So again, the peak here was 55% in regards to the relative highs. As we were going lower and lower over time, we had 57%, and again, marking down to 55%, and now we're up towards around 53.5%. So I don't think this is going to last too long. You know, we're not that far away from the bottom in regards to price for Bitcoin, but I think we're going to possibly class in a lower high here on Bitcoin dominance, but still you've got a good percentage to go there in that case. Percentage or 1.5%, really depends if it goes to 54.5 or 55, but again, it's a margin of error in that case. It's very small. So again, taking a look here, I had been watching for price to continue riding in through this channel and to see a break on one end or the other. Again, we've seen multiple lows tested here, as well as the line of resistance here, which is still quite far away from price. To be fair, guys, I'm not going to try to make too much crazy calls here. This market is very thin. Just take a look at the volume. I will say more than anything, I think it's likely that this is probably going to come down. We've gotten shot every time at the 200 hour as we originally got above it, but then we broke below, and it served as resistance, as well as some of these moving averages. When the 50 and 100 hour are your lines of resistance and you're not even making up to the 200 hour, it's likely that it's going to falter over. But we have no idea. Anything can really happen to this market in regards to the whales at the moment who are really controlling things and trading on BitMEX. But again, it just doesn't look like a good signal price. The only volume we've really gotten over the past few days has been here over the past few hours, and it's really pressing price on this line of support here. So again, only about a $300 drop here back to the lows. Not too hard to believe, especially with Bitcoin dominance rallying like it has, and altcoins following quite steadily in regards to Bitcoin's decline. So that's what I'm watching at the moment. Nothing too crazy. One thing I want to take a look at as a sign of kind of matching up here in regards to the market sentiment. Again, not too far away from Ethereum's lows here. Another, 20% decline here from $100. Not that hard to see. I think we could retest the lows. And if we get a double bottom in this market, that's actually a really good sign of confidence, guys. We need a nice extended double bottom, something that wouldn't have been, a day or two in this case, apart, or a 1 week double bottom. This is something that is formulated over the past 2 months, and if we can get a double bottom at that price range, I'm going to feel real confident. So because of that, not going to be taking too much of a look at altcoins today. I want to go ahead and dive into our news here for crypto markets. Overstock's T0 launched their exchange yesterday, and again, as we talked about, this has been highly anticipated. I do want to dive into the article first, but man, did we not call it yesterday early on in the morning, where Overstock.com stock went up like 16%. Actually, I think during the highs of the day it was like 18, 19% or something. But Again, I think this is going to continue, guys. I think the hype is kind of real here. I think a lot of people in equity markets will be able to push a $590 million company quite easily. So I keep an eye on it. Not saying that it's going to go up guaranteed. It's down a little bit pre-market. I'd be waiting for a pullback on this, and definitely we'll keep an eye open to trading this throughout the month. But I think this has a lot to do with T0. I mean, this wasn't coincidental in regards to the price action we saw, because the platform did launch yesterday, and supposedly things are actually going quite well on it. Usually exchanges have pretty rough launches, and as they mentioned here in the article, it is still a work in process, and we'll talk about some of those things. They're really not that bad. It's more of the fact that T0 is actually keeping quite compliant with regulators. They want to be a leader in this space, and they understand that, at least in the modern world nowadays, you have to be a little bit compliant with regulators. And they not only have 10 tokens that launched yesterday, hovering around, slightly below the open price that they had listed originally for $10. Some of them in the early days, though, were going for 5 or 8 in regards to the pre-sale. Nonetheless, everything functioned properly, and they decided, in regards to keeping compliant with regulators, that they're going to operate between normal trading hours for equities. So they're trading between 9:30 a.m. to 4 p.m. Eastern Standard Time. Very normal time. And I think it's a good move, because this is when their broker, in this case, they have a really interesting name, Dinosaur, right? I love the company name. Basically, this is the hours that Dinosaur operates in this case. So they're trying to make sure that the broker-dealer services that they provide can run as optimally as possible. They don't want to try to operate that outside of normal hours. Not to mention, it helps regulators in this case, showing that they're trying to do things in a professional manner, trying to set some regulated time zones for trading. But more than anything, one thing that I think is really important, I think a lot of people miss on T0, is that Patrick Byrne, as well as a lot of people at the team at T0, have really expansive ideas. And really what T0 is offering right now is trading of equities, or excuse me, not so much equities, I guess in a sense, equities that are from seed state, or from VCs and traditional capital in that case, meaning that they're not trading companies that have already IPO'd or that have been publicly traded before. So they're securitizing companies, if anything, that again were maybe startups that hadn't gone public. So one thing that I really like here is that they're actually working towards another exchange. So T0 has served as this alternative trading service, alternative trading system that's allowing people, again, to start trading and making a market that traditionally wasn't liquid, or markets that weren't liquid, things that are now securitized through tokens, such as early stage equity and startups, properties, things of that sort. And they're also working towards what's something that one of their subsidiaries, Box Digital Markets, is working on, a Boston-based equities exchange or option marketplace that'll go live over the next few months or years. And basically what this is going to offer is it's going to offer an opportunity for people to trade traditional equities that have gone public onto stock exchanges. So I'm really excited to see this, to see this kind of crossover and what it may mean in regards to potentially being the first candidate who can grab in some of that institutional audience and bring it onto a platform that will get people comfortable with security tokens and getting more comfortable with things operating on a blockchain, and possibly, what if they can make the bridge towards crypto in this case, at least cryptocurrencies rather than, say, some of these ICOs and things of that sort. That would be extremely interesting. Really exciting stuff. Again, a little bit of speculation at this point, but I think Patrick Byrne's got the vision in his mind, or at least something similar to that, because he's a genius guy. But very excited to hear that T0, out of all the institutional plays, I really admire them. Glad to hear they had a successful launch here, and I'll be keeping an eye on them as we go into the future. Now we got to talk a little bit about the app Kik, the messaging app in the United States that it's not really that popular, so I think that's why they did an ICO. But in regards to Kik, they did Ken, an ICO that did quite well back in 2017. And with this ICO, the SEC has started to come under with some criticism of the platform, letting them know, actually let them know quite early on. It's just kind of resurfacing now that Kik's responded, that this was an unregistered security in this case, that Kik went about raising capital like a security, and they had not registered to do so. Now, the whole dispute here, again, this is something that's gone back as far as 2017, but it's kind of resurfacing now. The key thing here is that Kik responded by simply saying that they were trying to, create a cryptocurrency in this case, right? They weren't trying to do an ICO or register a security in this case. But the problem here is it's a debate over the Howey test between the SEC and Kick in this case. Of course, Kick is obviously going to stand to its defense and say that, oh no, we weren't trying to raise an ICO. We were not trying to raise capital for equity in any case of some kind of body. But the problem with this is that if we understand what the Howey test is, the SEC has a lot of leverage here. It may be that they were simply trying to build a currency for their platform. And that, for example, Kick here says the commission will not and cannot demonstrate that kin in and of itself or any specific sale or distribution of kin fall within the purview of federal securities law. Well, they actually can, to be fair. I don't mean to be too opinionated, guys. I know some of you might be invested in kin. I'm not saying that the project isn't good or not, but we need to understand what the Howey test is. So in this case, the Howey test is really a combination of measuring 4 different values to ask whether or not it's a security. We've probably talked about this before many times, guys, but I think it's important, to kind of step back and realize that the ICO market needs to be relatively compliant. If you're going to be raising 50 or 100 or 200 million or billions of dollars, yeah, I think it's pretty reasonable to say you're going to need some participation with regulators. But here, let's go ahead and read through these, and you guys can answer for yourself whether or not kin is a security in this case. It is an investment of money. There is an expectation of profits from that investment. The investment of money is in a common enterprise. Any profit comes from the efforts of a promoter or third party. Let's think about that there. It is an investment of money. It is an investment of money. People are putting money up. They're putting Ethereum up for these ICOs. There is an expectation of profits from the investment. Boy, I can tell you, we can be as arrogant as we want, but I know every single person who was investing in ICOs was hoping to make a profit. You might like the idea, but you were hoping to make a profit. That is a core belief in these tokenized economies. The investment of money is in a common enterprise. Well, it is in this case. It's investing into this kin platform, right? Which is basically going to be kind of a currency gateway and stuff for services and payments on the Kick message app. So, and the last one is any profit comes from the efforts of a promoter or third party. Now, this one might not be exactly true in this case. Profit might just simply come from speculation in this case. The token might just go up because a lot of people are buying it. But again, I think it's still, in this case, you do have the promoter, the third party, which is Kick in this case. I'm just saying, more than anything, you don't need to meet all of these standards. You really only need to meet one or a few, and the SEC starts to get, it starts to get its mouth watering in that case. It starts to get a little bit excited because that does fall relatively close to securities. So, they're going to be, I think in this case, Kick had stated down here that they were willing to take, in regards to the enforcement action, they were willing to prevail in court against the SEC, but we'll see what happens. I think this is one of the better examples of ICOs that actually might be building something in the long term, but it also seems like a dying message app that was trying to take advantage of a way to raise a lot of capital with all due respect. I just don't know many people use Kick. It kind of became a joke after a while, but all the best to them in that case. I don't mean to be negative, just again want to talk about the importance of how the ICO landscape is going to be getting challenged over the next year. Alrighty, so we need to talk about something that's even worse than ICOs over the past year, and that is the death of exchanges. Today we have the face, which is Liqui in this case. I think I registered a profile a long time ago on Liqui, or at least I explored it, but nonetheless, Liqui was actually one of the decent-sized new exchanges that popped up back in 2017. I remember when they first came out, and they had a lot of altcoins that didn't get covered by some of the exchanges, which gave it some advantage. And they even stated, for example, down here that was one of their major business models, that they had offered smaller market cap coins, best known for listing coins, again here, that people can trade on other exchanges. But Liqui was one of many other exchanges. You can see here that they were ranked 181 in regards to the list here, which tells you two things. A, there's a lot of cryptocurrency exchanges, and B, if they were processing $85,000 in volume over the last 24 hours, not to mention you got to deduct market making, and in some cases for these other exchanges, I don't think Liqui was doing this, it's too small, market making, or wash trading in this case, or even worse, you've got to ask the question, how many other exchanges are there, and how bad is it really on all these other platforms? Because many of these exchanges, many of them in which are in Asia, probably in China, or in other regions of the world, they might not operate in China, but they did their ICOs in China or near China. A lot of these exchange platforms, guys, have been huge criminal syndicates to get money out of countries, right? It's a big way of exporting money through ICOs. And they all hope to build, I think, either some short-term hype model or actually build out a crypto exchange. There's some that are actually quite legitimate that have launched in this bear market. But the problem is, it doesn't matter whether or not you were trying to do something legitimate or not. It's not the time for it. And it's way too oversaturated right now. The reason I say that is that, a lot of these exchanges don't have good marketing plans. They're launching into a market where volumes are already decreasing, where I just saw actually Binance as well had to increase their referral link, the referral link payment. This is not the good time to launch, an exchange in this case, when things aren't trending, when people aren't excited. So it's something that I think will, in 2019 or 2020, will be a better environment. But you can see here, Liquid's not the only one. And it's nice to see that they were at least smart in realizing, now's not the time. It's not smart for us to conduct our business. But there's a lot of exchanges that raised way too much capital and are not going to deliver on much because they don't have the audience. They don't have the capital. All it is market making, and they're trying to convince a few retail traders to get on their exchange in a market where there's already a saturation of hundreds. And you got to do something different, right? You got to stand out in some way, shape, or form to really get new users on your platform. And if you don't, if you keep repeating the same exact thing, saying, oh, we're just going to trade crypto, that's not going to do it. You got to be outside the box a little bit there. All right, so I've rambled on about that enough, guys. What's nice is that we'll filter out, this goes with the ICOs and the exchanges, we're going to filter out through a lot of the noise over the next year or so. And it's going to be really nice to see how this space continues to grow. Now, going on to traditional markets, we're going to be focusing in on our one topic for the day, and that is the Bank of Japan. So, in regards to this recent data scandal, there's been years of manipulation in economic data for most economies. The United States doesn't really give real unemployment numbers. China, for example, has found so many ways to jack up GDP. It's just not even, it's laughable in this case. And people usually, when they actually look at the economic data, they not only know how China starts to bolster those numbers, but they also know how to deduce them. And usually, you can roughly just estimate that 1 or 2% of the GDP they're adding is not existent, right? Well, anyways, in this case, Tokyo had admitted, the Bank of Japan, that 40% of its economic data is fake news. Well, in this case, I know it sounds quite simplified, but what does that really mean? It means that about 40% of the economic data reported under the Bank of Japan for the state of the Japanese economy has been falsified, and that it's been tampered with to some regard, and or in regards falsely reported, meaning that it wasn't conducted properly in this case, that the numbers don't speak to the truth. So let's go down here. We'll go through a few of these highlighted parts. Unfortunately, in this case, there are many other examples, according to an International Affairs Ministry report released late Thursday. Nearly half of Japan's key economic government statistics need to be reviewed, with 22 discrete statistics, or roughly 40% of the 56 key government economic releases, turning out to be fake news and need to be corrected. So this came from the Internal Affairs Ministry in this case. This is not good to see. And when we talk about economic data, it's important to understand just how, much like, for example, in 2008, it's very important for the rating agencies, or was very important for the rating agencies, to be transparent, which they weren't, which led to the mortgage-backed securities being false in the sense of the assets that they really held. It can lead towards entire economic meltdowns when we don't have true transparent data. And Japan, in this case, has the same situation to worry about. Central banks and organizations in finance who don't report true data can lead to the same cases we saw in 2008, because it can lead to a much lower valuation in the currency. We could have highly overvaluated what the yen is worth compared to other currencies if we have falsified information. Japanese equities markets can be way higher and then deplete heavily when we figure out about this data. So again, there's so many macro factors that can be affected by small misinterpretations of data. Here's a quote here right now in regards to a quote on in Japan here. "There is no telling how far the impact has spread," said a senior Bank of Japan official. And for the Bank of Japan to admit that economic data in Japan is now sheer chaos and that inflation has been overstated for years is nothing short of catastrophic. So, central banks across the world try to maintain around 2% inflation, and Japan has not been able to reach those numbers in this case, which might be signaling that after all the stimulus they've done, after all the efforts they've done, they can't get real growth in the economy. Now, inflation doesn't always conflate with real growth, but it's tended that in this case, when you have these stimulatory efforts, you want to see inflation rising. And Japan is not getting that. Many central banks are not getting that. Inflation has actually been quite short in this case comparative to what they want to see as central banks. Meanwhile, adding insult to the injury, Japan's latest scandal means that whereas everyone has long been making fun of China's economic data for being manipulated, fabricated, and goal-seeked, Japan's own data was far, far worse. So really, it might not sound that bad, guys. Maybe it could be in some cases that it's a slight misinterpretation, right? Maybe a good chunk of this 40% of economic data is just slightly misinterpreted. But this economic data has massive ramifications. Japan is one of the world's largest economies. It's not the largest, but it's one of the largest. And in this case, if Japan is going through such bad practices as we see with China, as we see with other economies, it leads you down the rabbit hole of thinking, just how bad is it? Well, I know in Japan's case, look, I love Japan, guys. I think Japan's a really cool country. But, man, when you talk about mismanagement of central banks, all you need to do is watch The Princes of the Yen. That's one of the best documentaries I can recommend to you guys if you want to learn about traditional markets and you want to talk about central bank-built bubbles. It's not only important to watch that, but you can see we're repeating history here. The Bank of Japan here, the BOJ, is a top 10 shareholder in 40% of Japan's listed companies. 40%. They are also the largest ETF holder in this case. The Bank of Japan owns $150 billion of its sovereign ETFs, in this case, Japan's publicly traded ETFs, which means that they own a major stake in equity markets. Just think if they started to dump a bit of that on the open market, say like 30 or 40 billion, right? If they wouldn't even do that. They wouldn't even fathom doing that because it would plummet markets if they were to try to provide that sell-side pressure already in a global bear market. And what I find funny here, this was a Bloomberg article back in December of 2017. The bank had currently planned for 2018 to only spend $53 billion in ETFs that year, folks. Well, there we go, ladies and gentlemen. We're really making cutbacks here. When your annual spending on ETFs is 33%, if not more, actually a little bit more in this case than 33%, of what you've already bought of your own country's ETFs. Man, that's making some real cutbacks, right? I'm sorry, I think this stuff is almost comical in a sense. It's something you gotta laugh at because it just doesn't make sense. But really staying conservative here in the Bank of Japan, really staying conservative. Anyways, highly recommend, guys, you guys continue to learn. Watch that documentary on the Bank of Japan. In regards to equity markets, guys, not too much new. The market is not open today for Monday. We can go ahead here. We can see markets are roughly down a little bit over the past few hours in pre-market trading, but we'll have to see what happens. I think the major thing you're going to watch for here, guys, is this line on the NASDAQ. I'll go ahead and even bring it over to the real NASDAQ. And you can see here, I think we're going to get this line of resistance here at around 7,300 points on the NASDAQ. So that's really the key indicator I think everyone's watching with this expanding channel. And this means that as we're going lower here, we're not only making lower highs, we're making much lower lows. And it's getting exponentially worse in this case from what we're seeing each time. As you can see, the sell-offs expand over time, as well as these little short-term rallies because you have lower lows in this case. But eventually, I don't think you're gonna, be having as strong of rallies as we had this month. We had a lot of things keeping up the market. You had the restructuring of pension funds, huge buying pressure for the market. You had stock buybacks in the earlier part of the month, which we're actually now in a blackout window right now for a buyback blackout period for equities, where like 50 or 60% of companies can't buy back their own shares. Not good for the end of this month. And along with that, you've been having a lot of falsified pressure on the markets in this case, not to mention the central bank balance sheet bumping back up on a global scale. So, again, lots of things to take into account, guys, but I think that'll be it for the daily update today. Thank you all so much for watching, and if you guys have anything you want to say, please leave it down in the comments down below. Get a discussion going. I always love having you here. And again, if you guys have any feedback for the daily updates, let me know down below. I know some people have wanted me to kind of get more back into covering crypto, so I definitely want to make sure I cover things that you guys are interested in, but at the same time, I try to share with you all the things that I find interesting and relevant, because there's a lot of noise out there. So I just really try to filter through and get you guys the best news I possibly can to focus on the real stuff. Anyways, that's it for the video. Thank you all so much for watching, and I'll see you all in the next one. Stay tuned.